Beyond Meat is waking up to another big day of anticipation. After Monday's steep sell-off, the question on everyone's mind this morning is simple. Is the short squeeze story finished, or is it just resetting for another run? The stock closed Monday at $1.81, down about 17% on the day, and lost a further 8.5 cents in the aftermarket. That marks another leg lower from the previous session, and it shows that momentum, at least for now, has cooled sharply. But interestingly, even as the price action fades, Beyond Meat is still one of the most talked about names across social media. The attention hasn't gone away. So, the setup remains the same, but the energy around it has shifted. The retail crowd is still watching, the short interest remains enormous, and volatility is still baked in, but it feels like we've entered a different phase of the cycle. What happens next will depend on whether this current quietness turns into a springboard, or whether the rubber band has finally snapped. Let's go through what's happening, what's changed, and what to look out for as we head into Tuesday's pre-market and the session ahead. First, let's recap the setup. Beyond Meat remains structurally one of the most shorted stocks in the entire market. Depending on which data provider you look at, the short interest ranges from about 60% to well over 100% of the free float. That's almost unheard of. It means that short sellers have borrowed and sold more shares than even exist in the freely traded market. That's the fuel that powered last week's explosive short squeeze, and it's also the reason why traders are still glued to this stock now. Even with the price down this much, the ingredients for another run haven't disappeared. What's changed is the temperature. The immediate intensity of trading has cooled. Monday's session felt less like panic or euphoria and more like exhaustion. The tug-of-war between retail buyers and short sellers seems to have entered a standstill. We saw that play out in the tape throughout Monday. The stock bounced around early, with a brief push above $2, but couldn't hold any real momentum. Every pop was met with selling, and by the close, volume had dropped substantially compared to the peak of last week. That tells us this market is catching its breath. And yet, there's still enormous tension beneath the surface. Even now, Beyond Meat dominates online discussion boards, Twitter, and Reddit. It's trending across trading forums. It's still being talked about more than almost any other stock, especially among retail traders who are watching for the next major squeeze setup. So even though price action looks weak, sentiment, while wounded, hasn't disappeared. That's what makes this play so interesting right now. Now, it's worth remembering that part of what triggered this recent volatility wasn't just technical. The company itself has been in the headlines for its financial situation. Beyond Meat recently completed a massive debt-for-equity exchange, issuing hundreds of millions of new shares to reduce its debt burden. That was an act of survival. It bought the company time, but at the cost of heavy dilution. The market saw that as a warning sign, and the stock initially plunged. But it also created a setup where, with such a small remaining float and so much short interest, any influx of buying could create an explosive move, which is exactly what we saw. But fast forward to this week, and we're back at a crossroads. The fundamentals haven't improved. The short interest hasn't gone away. And traders are left trying to figure out whether the stock has another push left in it, or whether it's sliding into obscurity again. So let's break down what's going on right now. Number 1. There's no fresh catalyst. Monday's drop didn't come from any new announcement. There was no downgrade, no news release, and no surprise update from the company. This was purely momentum unwinding. When the speculative energy fades, stocks that moved up quickly often retrace just as quickly. Number 2. Volume has collapsed. During the height of last week's squeeze, Beyond Meat traded hundreds of millions of shares per day. On Monday, that number was drastically lower. Volume is the heartbeat of a squeeze, and right now, that pulse is weak. If we start to see pre-market volume creep back in today, that would be one of the earliest signs that the next phase might be building. But without it, the stock will likely continue to drift or fade further. Number 3. Support and sentiment. The $2 level has now become a critical line in the sand. It's psychological, and it's structural. If that level holds through pre-market and into the open, it keeps the door open for another leg higher later in the week. But if the stock breaks and closes below 180 with conviction, the setup weakens considerably. And number 4, chatter is still high. Across retail communities, Beyond Meat remains one of the top-mentioned stocks in the market. That matters, because retail momentum often precedes price movement. It's like a weather pattern. Sentiment builds online before it shows up in the chart. So far, people are still talking about the possibility of another run, but we're seeing more hesitation in those conversations. There's less "we're going to the moon" and more "we'll see if it bounces." That shift is meaningful. So, what should traders be watching for today in the pre-market and the early session? The first sign to look for is whether we get a pre-market rebound. If the stock stabilizes around this level and starts ticking back toward $190 or $2 with increasing volume, that could suggest that bargain hunters are stepping back in. If we see the opposite, continued low-volume drift, it's a sign that enthusiasm hasn't returned yet. The second thing to watch is how call option activity develops this morning. During the squeeze phase, there was huge call buying that forced market makers to hedge, amplifying the upward moves. If that activity restarts, we'll know that traders are positioning for another attempt. The third key is sentiment online. Keep an eye on social chatter this morning. If Beyond Meat starts trending again on Reddit or X, it could bring new eyes and fresh money back into the stock. This stock moves on energy, and right now, energy comes from crowd attention. So what's the game plan heading into Tuesday? If you're still holding a position from the earlier rally, this is the time to stay disciplined. You're in the higher risk part of the cycle. The stock is now sitting on fragile support, and momentum has clearly faded. Protect your capital. If you're still in profit, think about scaling out. If you're underwater, make sure you're managing risk properly. If you're on the sidelines and looking for another entry, the key is patience. Don't jump in just because the stock is cheap. In a market like this, cheap can get cheaper very fast. Wait for a real sign of reversal. That means rising volume, clear higher lows, and confirmation that buyers are regaining control. And if you're a short seller, keep your stops tight. Even though momentum is fading, the short interest remains massive. All it takes is one headline, one influencer tweet, or one unexpected surge in volume to spark another wave of buying pressure. When short interest exceeds the float, moves can be violent in both directions. So, where does that leave us heading into Tuesday? Right now, the setup is fragile, but alive. The short squeeze potential hasn't disappeared, but it's in hibernation mode. Think of it as a stretched rubber band that's been pulled too far. It's either going to snap, or it's going to reload for another stretch. Tuesday's pre-market and early trading will likely tell us which one it is. If the stock holds the $180 to $2 range and finds buyers, we could see an attempt at another rebound later in the week, possibly as traders start to position ahead of Beyond Meat's next earnings on November 4th. But if it breaks down further, the rubber band may have fully released, and the squeeze cycle could be over, at least for now. So as you watch the market open, remember this: Beyond Meat remains one of the most volatile and closely watched names out there. The story is still unfolding, and the next move will depend not on fundamentals, but on psychology, the behavior of traders reacting to tension, fear, and greed. Right now, the mood is quiet. But quiet can change in a heartbeat, especially when the entire market knows how tightly wound this setup still is. Whether the next move is a bounce or a breakdown, it's going to be fast, and it's going to be sharp. Stay disciplined, stay objective, and keep your eyes on the signals, volume, sentiment, and that critical $2 level. The game isn't over, it's just in a new phase. And as we've seen before with these highly shorted names, when the market thinks it's safe to stop paying attention, that's often when things start to move again.